Hello everyone and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel and I'll pass those on to him. We remind you that this webinar will be posted to our YouTube channel in a few hours time, so if you'd like to watch it again, you can do so there. And we'd love it if you subscribe to our channel and click on the bell to get notified. The handouts for the webinar can be downloaded in the handouts tab of your GoToWebinar control panel. If you're having problems downloading them or locating them, please just let me know in the questions tab and I'll send you a link and you can just download them using the link. The first is a guide to the different technical terms and indicators that Trevor uses during the webinar, and the second is a CFD guide which details all the different products that we offer at FXChoice. If you're watching on YouTube, all of these handouts will be available in the description box below. I think you have to press read more or something and you can see them below. For those of you who don't know Trevor, he has over 40 years experience as a technical analyst and trader and was the former global head of technical analysis at Bloomberg. Trevor, over to you, sir.
Yes, thank you very much indeed. Welcome everybody. So pleased you joined us this week. So we're going to go through as usual, starting with the currencies. Then we'll go to the cryptocurrencies, precious metals, crude oil, and then down to the stock indices. But if there's anything that you want me to cover, please just let me know and interrupt me. Send a message to Dan. That's a great way to do it. And then I'll try and cover those things, or any questions at all about the analysis or interpretation that I'm giving you. So let's start with the relative rotation graph of the currencies. So those of you that are familiar with this will already know that we've got in the middle, we've got the US dollar here, crosshair. Everything to the left of it is underperforming the US dollar. Everything to the right of it is doing better on a relative basis than the US dollar. So if you, of the G10 currencies, the strongest is the Swedish crown, and then sterling here, and the euro here, and the Canadian dollar here, all to the right. Remember last week we were talking about the Norwegian crown, and we were thinking that it was heading. And this is one of the advantages of the RRG graph. We could see how it was heading, and now it's joined the group of currencies which are outperforming the dollar. New Zealand dollar has really faded away, and surprisingly here, the Australian dollar, I say surprisingly because usually there's a strong correlation between the Australian dollar and the Canadian dollar, but the Canadian dollar is a much better proposition than the Australian dollar. And sticking over here on the left-hand side is the Japanese yen. So if you want to pair off anything, either pair off against the US dollar or the Japanese yen, as the best combination at the moment. But the direction you can see is mostly, apart from the Norwegian crown, is a southwesterly direction. So this New Zealand dollar, this is the Friday, this is Thursday, Wednesday, Tuesday, Monday. So heading southwest here, and also the gap widening. So it's speeding up its direction. So I think this is good. This trend in the New Zealand dollar is going to increase. So this helps us with our choices of things. If you want to play the dollar, how best to play the dollar. If you want things which are weaker than the dollar, then you choose things over here, probably the Japanese yen. And if you want things which are stronger than the dollar, then you probably go for probably the pound or the euro. But they're not as far to the right as they were. So the outperformance is not as strong as it was. So let's go through those now. And we'll start with the euro itself. So here it is, struggling a bit at its previous high. We'd put this big cigar in here on the weekly chart a long time ago. It was always going to be significant level to break, and here we got to it, and now we're struggling just below it. So technically, this is not in itself a big surprise. We've got big support, rising low pattern here, which is a bullish pattern. Continuing. 117, of course, is the major must hold level. We've got this bearish divergence in the weekly high, higher high, and then lower high. So that warned us that this high had lost momentum and that it probably would struggle, as it is doing now. So Struggling at the previous high is the tone on the weekly. On the daily chart, we've got this easing off pattern that we were seeing there. It's being rebuffed there by that important high. The resistance from January at 123, but more significantly, the 2017 high at 126 is a big problem for it. The weekly MACD is positive, so I'm staying positive on it. The RSI is on the daily chart here has come down below 35 and turned up, and that's a dip in a bull market. So for some people, swing type traders, that's the kind of dip they're looking at for. And so if they see a resumption of strength, some one white candle today or tomorrow, this might be the pullback that they were looking for. You know, we've got some resistance, but we've still got a constructive pattern. Much too early. I heard somebody, another colleague, technical analyst, saying potential head and shoulders here, but wait, that's a very early to say that. The neckline was really down at 118 here, so it's only a head and shoulders when you break the neckline. A higher high and a lower high is not a head and shoulders, not unless you break the neckline. A higher high, lower high pattern most often results in you going up, not down, but up. It's only the breaking of the neckline that triggers that. So it's much too early to talk about head and shoulders pattern. Now moving to cable to sterling. So start with the weekly chart on sterling. We're, you know, incredibly, and I mean, Dan and I had a little talk just before we started today, and you know, who'd have thought, we both thought as Englishmen, that here we are now, having had Brexit's happened, all the doom and gloom and how terrible it was going to be for Britain, and so forth, and here we are back to pre-Brexit levels of sterling. I mean, the foreign exchange market is the great judge of whether it's good or bad for the country, and the answer is, well, so far, no difference is what it's saying for the country. So on the weekly chart here, we've got a nice pattern of rising lows in here, still intact, still bullish here. We had this spike high back in February, which is being tested now, the 142.35 high. But let's just look at this long-term charts, go back 10 years on it. This is what we're seeing here. This is that spike high I was talking about, but more significant is just below 144, this big double top here, which sort of started the whole tumble downwards. That's 2018 highs, and then we've got some other areas of resistance. But this looks like, you know, dare I say it, a massive double bottom. Low, the same low, and here's the apex in between. We break 144, then the count would be from 114 to 44, swung up, which would take us right up to about 166, 68, something like that, right up there. That's, you know, big picture, huge big picture, but you know, it's a bullish picture. But we've got to clear the resistance, but it looks like we're heading to do that. So dips to buy on, maybe we're just completing a dip, and that could be, you know, a setup depending on your entry technique. Yes.
Can I just interrupt you for a second? Oh, sorry,
sure.
I wasn't sure if you were just finishing this up.
No,
But we've had a request to look at GBP, Japanese yen also. So I just thought, whilst we're here, maybe you can.
I was just about to do that.
Okay.
Yeah, here it is, because that was I don't know if it's the same person asking that asked us over the last couple of weeks.
It is, yes, it is. Yes, yeah. It is.
And it was a good observation that, you know, on the basis of the RRG, good combination is something over on the right, like the Canadian dollar or the euro or the pound, versus not the dollar, but something further on the left. And very consistently, the yen has stayed underperforming the US dollar. So to pair the pound off with the dollar is a very good proposition. So, you know, well done for that. But that's something that the you know, the RRG helps you see. And what we've got here is an absolute tremendous chart, because in contrast to the pound on its own, this would be the equivalent to the 114 level on the pound. But the then above us, we've got lots of levels of resistance. Well, here we haven't. We tumbled through here. And so the passage, there's very little friction above. So if this breaks this level at, let's call it 155 area here, and that's generous, 155, then I think, you know, it's like going to be like a release of a catapult. This could really get a lot of power behind it. And here too, we've got a big double bottom here, massive one. And this is the count from, let's just do it, 1, 2, 3, 5, 6, and go up 1, 2, 3, 4, 6, up to here, up to the head and shoulders, which was the top on here. Amazing. This I would agree with you, whoever that is, this is the best on the board, you know, actually at the moment. And with an, I know it's gone up a lot, and it will have been profitable for you because you know, we talked about this, and you picked up on it and said why not that combination, dead right. And but I think the best is yet to come on it if we clear this resistance level here. So watch that. But we're moving towards it, so I think it's fine. We're hesitating a little bit, but this is a good pattern here. Look at these impulse, pause, impulse, pause. That's how it's stepping its way higher. It's come back to a support point level here, so it should come to rest sometime this week, and then I hope you will be rewarded with another one of these lurches higher, sufficient to take us through that resistance point and release the Kraken, you know, the monster of the bull market that may follow us there. So yes, and then the other one I would like to do is the Canadian dollar. The Canadian dollar has been a favourite. It was the furthest on the right for a long period of time. Now it's on the right of the dollars. On the right, I'm just saying, stronger than the dollar, but it's lost a bit of its edge. But the whole picture really hasn't changed. And here's the big picture on this. So we've broken this important low here, just below 123. We are finding support at the 120 round number, support here. But this is potentially very threatening. And look what is below 120, nothing at all until you get to about 110. 10 big figures there with very little friction. This is a big threat here. And so, you know, if this dollar steadiness, you know, and the dollar is you know, what is it? So 1 month high, isn't it? But if the longer term dollar weakness reasserts itself sometime soon, then that will take us through, and this could be one of the best plays as well. So I think we've got the Canadian dollar as one that we like to exploit the dollar weakness. So see this as a rally. Here the RSI has come up above 65. If it turns down from here, a couple of black candles here, that's hopefully the completion of impulse reaction, new impulse here, triggering release of energy as we enter that zone of no friction on the fall. So pound yen, pound dollar, and Canadian dollar we like most. The problem with the other ones is they meet resistance. Here we want charts that can move, you know, freely and not hit their head as soon as they make the move. All right. If you're finished with the currencies, I'm gonna just talk about now the cryptos. And again,
yes,
just before
we're finished. Yes.
Sorry, are we?
Sorry, no questions.
Okay, good. Okay, we'll look at the RRG on Litecoin, Ethereum, and Bitcoin, and I've moved it over here for clarity. But you know, what we've got is all of them west of the US dollar. This is the dollar here, so underperforming the dollar, but with positive momentum. So they're above 100 on this axis, so improving. So and that's why it's called the improving column here. So it's underperforming but improving. Bitcoin is marginally to the right of Ethereum. Litecoin is further over here, and that I think is the order of what looks the most attractive when we come to the absolute charts. So let's start with Litecoin, you know, which was furthest to the left and I thought was less attractive. Here's the weekly chart, first of all. So we pulled back, and one of the reasons I think it's the least attractive was the extent of the pullback was bigger than the other one, more than 61.8. You know, it's devastating for a bull market, and very often it takes a long time to get back to the highs. You know, could be even years, something like that. We are forming a sort of triangular shape here, but it's thin triangle. So this means that the bulls are not very convinced. Also, the bears are not very convinced. If we break out this triangle, it's probably not going to move very much at that moment there, not be an explosive move. It could be up and it could be down. And I'm not really sure. I think more marginally it's going to, you know, I think it's more likely to be up than down, but that's only slightly. But I've got these levels here. We're also approaching the apex of it. That's another reason why the move after we move out of it might be rather weak. But let's look at the Ethereum chart now. And again, let's look at the weekly chart here. You see here, the pullback was not more than 61.8. That was bad enough. But Litecoin was right down here. It picked up support at 1,800, and that was enough to hold it. And then it's stabilizing in a different sort of triangle here. It hasn't turned bullish yet on the MACD. So we got another triangle here, but this has got a different characteristic to it. It's got a more horizontal top and a steeper bottom. Not a well-drawn line here, actually, because there are really only 2 points on it. But it's a wedge pattern, or if it was horizontal, you'd say it was an ascending triangle. A bit more bullish pattern. And so although we're testing the bottom of it now, I think it's the upside that will be threatened on that pattern. And we can move up there to, in the short term, 3,900 area, and then the 4,200 high, which would release a lot of energy if we broke that. But the area from there to there should be relatively friction free, and the steeper trend line on this side means that the move out, although we're testing the bottom of it at the moment, should be to the upside. But of the three, Bitcoin looks least bad, if you like, and may have already made its break. So let's look at the weekly chart firstly. So here we only pull back 50%. So there's a message in that. How bad was it? You know, it really felt bad, didn't it? But it actually was not as bad as the other ones there. So they were weaker. The bears were stronger in that environment. It picked up its support at this congestion here at 3,600. Ethereum was here, and Litecoin was right down here. The amount of damage that the bears could do was terrible, pretty bad. You know, bad enough here, but 50% you can recover from 50% and go on to make new highs in, you know, in a relatively short period of time. So this wasn't quite as much damage done in this chart here. So what's the pattern here? We've got this. Well, it depends how you draw it, but I do think we can. This is a very legitimate. Let me extend that line there. We got this. Rather symmetrical triangle. It's sort of thin and it's wide in terms of time, and it's thin. Therefore, the bulls are not particularly convinced, and the bears are also not convinced. But I do think it's broken out here on the upside, and we'll see. You know, if we can make a new high by the end of today. The indicators have turned up. The RSI is making higher lows. And I think that we're headed not massively, I'm not saying new highs or anything like that, but into this zone here above 5,100. So move from here to 5,100, it's a big move, is entirely possible. This was so fast here that there shouldn't be too much friction. And I think it's starting right now. It's starting to make its move. It's beginning now, but not massive, because of the height of the triangle indicates that there isn't a great deal of certainty or confidence amongst the bulls. Now moving to the precious metals. Now gold. So, well, you know, gold's at a 10-day low, in fact, at the moment. So it's was so terrific, and now it's lost a lot of its shine. But does this need any more than just a pullback? Here's the longer term chart. Too long, actually. Let's get that back to 2-year chart here. So we had that double bottom there. We've hit some resistance in this consolidation here. There is a more significant, important resistance at 1950. I think the breaking of that would be very bullish indeed. But the journey upwards has been interrupted. The MACD hasn't turned bullish on it, actually, on the weekly anyway. So here on the daily, we're easing, we're testing, unfortunately, this low on here at 1855. It's being tested now. If that gives way, then I think we're back to 1820. If that gives way, and there's not a lot of support at 1820, we can be back below 1800, this area in here. So it is continuing to look a bit weak in the short and intermediate term, having had a good run, if you like. So having a look at silver now. Silver's got a different shape to it. It hasn't turned down in the way gold has. It's forming this triangle, which has got equal angles above and below, could break up, could break down. I've drawn the lines as dashed because they're not well drawn lines. Maybe the upper one could go solid now with a third point on it. So we're flattened out here. It's narrowing up, so the bulls and bears are doing battle with each other. On the weekly chart here, you can see the significance of the area. We're doing it underneath these two highs here, actually quite far beneath them. The real resistance is probably lower. These were spikes, these highs, but it's struggling there. But behind it is a higher low pattern, which indicates in the end, hopefully is going to resolve itself to the upside. So both of them are looking a bit looking saggy, not a bit saggy, are looking saggy, are looking difficult. Silver's now actually looking better than gold, and that's a switch in how things have been. So sorry, yes, sorry, let me just go back to make sure that chart came up correctly. Gold and then gold. Yeah, no, that wasn't the right chart. So here's the weekly chart of gold silver ratio here, gold silver weekly. So going down here is gold underperforming. So it began to look as though it was bottoming out here, but now it's flattish on the weekly. But on the daily chart, it's looking like it's breaking down here, and so that's gold underperforming silver. So neither of them are looking that good, but if you get the break the levels on the upside, there's more potential in the silver than the gold, which is a change in how we were thinking of it in the last few weeks here. Moving now to crude oil. Now, crude oil, of course, is now trading at a 2-year high and close to some very important long-term levels. This is a nice looking chart here on the daily, isn't it? White, almost consecutive white candles here. But let's go to a long-term picture and just see what the potential is here. That we've got these highs which are being broken. That's very important. This is the 2019 high is being broken. But let's go back 20 years on here and see where we are. We've got another high from 2019 at 75.60. Then this high here at 85. But this journey down here, you probably remember it where we broke out this big symmetrical triangle here. The fall from 105. Ultimately coming to rest the first time at 45, so halving in price. That was a very, very, very fast fall. Their total collapse. That means there's very little resistance. A lot of resistance up here at 100 and up to 120. We spent 4 years there. But basically, we're moving quite purposefully towards breaking very, very multi-year resistance levels, which can bring in waves and waves of new buying in this. So this is a chart which is building up to be already it's strong. I know it's come up a lot already, but it's looking like it's about to get more legs, to the advance. I love the the approach that it's making, the widening Bollinger Bands, increasing energy, the MACD, of course, bullish, the RSI making new highs. It's looking good, oil. But these resistance levels are resistance levels, but it just looks as though it's approaching them with a lot of purpose, which means that they're, look as though they're good chance of making it through them and then getting more energy behind it as it goes higher. Right, moving now on to the US 500 weekly chart here. It's making its way up. Oh, that's a long-term chart, but that just reminds you how big this move has been. But look at that, it's a good looking chart. So, it's just moving away, quite an orderly advance. These everything's bullish in the weekly context. It's moving up, but it's not terribly exciting, is it? But it's, I mean, if you're long, of course, you're making money, so that's exciting, but it's not soaring or anything like that now, but it is pushing higher. So the indicators are bullish. The MACD is bullish. The RSI is making a new high. The ADX is at a very low reading, 12, indicating, the ADX says this market is flat. I know it's sort of edging higher, but it's really hasn't got a strong trend to it. And I agree. I don't think it has got a strong trend to it. This has got an ADX reading of 12 on it. And just as we go down these stock indices, I want to point out every one has got a very low ADX reading. The trend is not strong, except for one, that is. So let's go to the FTSE next. So the UK 100, and so this is also, this is a 16-month high. That's pretty phenomenal, isn't it? Given, given everything. I'm not sure that 16 months ago people would be saying that after the drop it would be making a new high at all, but it is. The RSI is positive, the MACD is positive. In the market, it's gently moving higher, and here it is here. But what worries me a lot about this is that this one bumps its head onto a ceiling, which is very solid. This is a concrete ceiling, and it starts pretty well here, 7,200 up to 7,600 or so there. We spent 2 years in that zone there, and we're moving purposefully towards it, but I do expect in the next week or two the fire in this will be put out, and the FTSE will stagnate, I think. But at the moment, it's looking very good. MACD is positive. The RSI is moving up on the weekly and the daily. It's all looking quite good. But watch out for the resistance. If you're joined into these stock market bull move, this particular leg, this is very late time to buy this one when it's so near such strong resistance. The ADX here, 12, another one with a very low reading in it. Now looking at now the German 30, this is moving up a better angle, isn't it, here? And look at the weekly chart here compared to the pound, where you had solid ceiling of concrete that it hit. This one is hitting blue sky. That's where it's hitting. It's making lovely new highs. It looks great. This is the best looking chart, I would say, in the stock indices from an intermediate term point of view. From a long-term point of view, I think it's I'll show you what I think it is. But here we've broken this high, we're surging ahead. The indicators are all very, very positive in the long term and the short term as well. And I think this is the leader. And for those people with that sort of medium-term horizon, this is the leader. I did miss one out, actually. I'm sorry about that. The Tech 100. Just go back to do that. And here, it's also steady, but this doesn't look powerful, does it? You think of what you've just seen with the DAX, the German 30 powering ahead so strongly. Yes, it is doing okay. It's approaching the previous high. So a lot of the pressure that we talked about in the previous weeks on the tech stocks, where they were really dividing up, some were good and some were not good. Well, overall, they're doing a bit better there. But I can tell you the breadth in the US stock market, the S&P 500, the number of stocks rising and falling, number of stocks, percentage of stocks above their 50 and 200-day average, the rising stocks times their volume, divided by falling stocks times their volume. All these numbers are deteriorating quite badly, and this is a big sort of message of a mature state in a bull market. It doesn't mean it's the top, and we've seen it before, but it is struggling, and we've definitely lost some momentum. We've got a bearish divergence in here. I'm not so keen on this chart here. We may well go on to make new highs, but you always have a choice. Why not go for the one that looks best? So you know what I think about that. That's the German 30, but this one here is not the one that looks best, which is the Japan 225 here. But I just want to remind you what we've got here, and just to watch this. So it's been tremendous, and it's you know, the long-term picture is wonderful, and we're heading, I think, towards the new highs for this, and it can do it this in quick order. But in the last few weeks, it had few months, sorry, it's been easing back. But I think it's forming a flag here, and so we've got this declining parallel shape here, volumes declining on the flag, which is very typical, and we're approaching a test of the top end of the flag. So if we break this, the top of this flag here, this is the flag pole, and the next count would be a swing, a nice big swing up from there. So I think that we're in a pausing state in the long-term multi-year bull run, which I think has got multi-year to run, but this is one of the zags. But the zag looks close to completing here, and we're getting ready for another zig in the market. Okay, so in conclusion then, I continue to like most the German 30. I'm worried very much, although the FTSE chart looks okay. It's about to hit its head on resistance. I'm very worried about the US stock market and the S&P and the Tech 100, in that they are looking tired, although they're still going up. All right, Dan, do we have any questions?
No, Trevor, that's it. Thank you very much. This is the one question today on the currencies.
Okay.
Thank you very much, Trevor. Thank you very much. I suppose we can finish it up there. Well, thank you very much, everyone, for attending. Please join us again next week, same time, same place. And don't forget that we're posting this webinar to our YouTube channel in a few hours or so time. So if you came later and you want to watch from the beginning, you can do so there, or you can just watch a piece of it. But if you do go over to our channel, please don't forget to subscribe to our channel and click on the bell to get notified. Okay, Trevor, anything else to add?
No, just have a good week, and watch that dollar for a resumption of the weakness in it. But at the moment, it's the strength. But you know, it's an interesting that things which normally have inverse correlations, only some of them are reacting in the way that you would expect. And oil, for example, and other commodities in the agriculture and the energy sector are not following what they should be doing. They should be weakening. No, they're strengthening. But watch that, and then stock markets are really interesting. Gold is silver, precious metals have kind of lost a bit of their shine and might continue to do so. And the cryptocurrencies are looking mildly better than they were. Thanks very much, everybody. Have a great week.
Trevor.
Talk to you next week, and may the trend be with you. Thanks
Cheers,
very
Trevor.
much.
Bye-bye, everyone.
Bye-bye.